Hey guys, so today I'm going to talk about Fibonacci extensions and Fibonacci retracements. Retracements are the lines that you see most often in charts that show the different levels of a given move. Now, there are a few things to know about them. In the broad sense, they are simply universally accepted levels that a price will move between as time goes on between a given move. So in this example, our given move is from the swing low, the lowest point, to the highest point. Now I chose this Fibonacci level right here because this is the first point at which we had an obvious pivot from the previous crash. So you could actually place these differently as well. So you could come from your swing high down here, start at your swing high and go down to your swing low on a downtrend. Now this would be your retracement levels for retracing back through the area that you've just passed down through. So these are useful for finding spots that the price may actually rebound off of. So let's move to a larger time scale here. Let's move to days on Bitcoin, just so we can get a little less movement. I say less movement. Okay, so we're going to start our move on this. Let's start with this one. So we had Bitcoin make an all-time high and then two more all-time highs shortly after. Then we had a crash over, what was that, a month? A little over a month. So at which point we started moving back up, a very obvious change from the previous price movement. So the swing low of our new uptrend here is going to be the bottom of the pivot. Now we're going to bring our swing high to the highest point that we've hit, which is the all-time high here. Now a good way to tell if you've chosen a good Fibonacci level for your swing low and swing high is to look at how price moves in between these points. So we can see that price moved up and fought around just smack in the middle of these two Fibonacci levels, and there's not much we can really gauge off this time period. But you'll see as time goes on and we've broken out of this time period, we start to really concrete this low to high move, and we start sticking to the exact levels of the Fibonacci sequence. So to figure out what's going on here, this fib doesn't actually tell you too much in trying to decide what's happening in this, what is that, 2 weeks? So for this area, we want to look back once more. Well, what was the move right before this? We had an all-time high, so that would be our, I'll just delete this to make it easier to comprehend. We have our all-time high, and we go downtrend to our swing low. You can pull this over as far as you want, just make sure that the bottom here lines with the low point, and the low point is about right there. I'm gonna turn this music down, it got super loud. So now we can start to see what this price action is doing. When you're bouncing between these fib levels, what you're really looking for is to see what this specific coin, so Bitcoin on Bitfinex, is sticking to in terms of support and resistance. So our first support level is right here at the 0.5 fib level, the 0.5 retrace level. Now this, when we made our fib, we're going from point A to point B. So this happened before we actually completed our fib down here. And what we're going to use a fib for is what happens after this time period. So just to make it clear here, I'm going to do this and move this to the left. We're looking to see what happens from here on. And we're using these previous levels to figure out where we'll find support and resistance as time moves on. So we can see that this was resistance in the past. We couldn't pass back up through it. We tried it 1, 2, 3, 4, 5, 6 times, or 5 times. And so when we do hit this point again and pass through it in this crazy day, we fall right back to below it and push right back above it and below it, and we start consolidating on this point. And this shows you that right here at the previous resistance is our new support. And you'll find that a lot, is that previous resistance is new support once it's passed through. So we fight this out, and then we get this another giant green candle, which pushes it completely through the previous move. Now at this point, our fib is not going to help us, the fib extension that we currently have. So let's delete this one. And how do you tell when this is going to stop? How do you know once you pass through a fib where the next logical stopping point is? Well, you can see where it tapered off and ended here at the 34. So why does that happen? Well, this is where Fibonacci extensions come into play. So for an upward move, we need to look at, from the bottom here, this is our low. I'm just lining up with this on this left-hand side here at the beginning of our move. Our swing high was up here. And click again. And now you can bring it back down to complete, just go back to the swing low, and you can drag it out to actually define these positions and how far out you want it to go. So I'm going to bring it over here so we have something to look at. But what you'll see is that our next level is perfectly settled right into touching the 1414, bounces right off of it, and they're kind of unsure on if we're going to stick to this or if we're going to come crashing back down to 1 here. But luckily here for bull Bitcoin traders, we busted right through again. And we can keep moving up this extension to see that it's very accurate until a new high is ultimately set and we've fallen from it. The next point that we stopped at was the 272 level, 2.272. And again, we just bounced right off of it. We're getting some opening and closing candles that are right on the point below it, which is the 2 extension. And what a 2 extension actually is saying that this is a factor of 2 of the overall move. So if this is our move from 0 to 1, it being technically over here. If this is 0 to 1, well, 0 to 1 is exactly equal from 1 to 2. And that's how these are being generated. And for whatever reason, it's just the laws of stocks and in crypto. Forex works a lot like crypto does in terms of Fibonacci's. We stop at the 272, find support at 2, and we kind of fight a little bit for about a week until we ultimately bust through it again, find the 2618 level, and fall back down to our previous support. So you can use this for future predictions by combining this with other indicators. The fib alone is not going to be enough to tell you what you need to know to make a good entry, but it does give you a good idea of where you are in the overall move. So what we can tell from this extension, this is not a retracement, this is an extension. An extension is anything that shows you what's happening after 0 to 1 or below 0 to 1. So what we can tell is that our support is heavy at 2, and we've bounced off that again recently. We've busted through the 2.272, and we've bounced off the 2.414. So where do we enter? Why is this useful? Well, we can combine this with other indicators, which, just for one brief example, I'm not going to get into these now. We can take stochastic RSI, which will show you if the market is in an overpurchased or oversold situation. Just for a quick kind of cover on this, this means it's overpurchased, which means price is overly inflated, and below 20 means that it's oversold or price is deflated. Now we can see here that we have a crossover right in the middle, which means that price is healthy. This says that this price point at this level is healthy. So we need to make, using this and other indicators if you're choosing, looking at the fib to say, okay, my support is below me, we're currently above the support level, and we have a healthy market that is not declining. So with that in mind, if the market is not going to be declining and we're above support, we can say that this is safely going to continue upward to a new level. Where might that level be? Well, it will start at 2414, and it should hit 2616 and test our previous highs here. There's other indicators to get a better look at this, but this is how you would use a fib extension to see where the price of an asset is going after a given move. So we can then delete this extension and come back to our overall move with a fib retracement from swing low to swing high. And we can see that we are right in between two fib levels here. So this is basically no man's land right now. It could go either way in terms of the fib, but using other indicators like I just showed you, we can kind of figure out where it's going next and if it's going to touch the top or the bottom. That's all this is telling you, is that you have one of two options, top or bottom, and that's your next real point of interest on what's going to happen in the market. Because as you can see, as price approaches these fib levels, we get a lot of volume of people fighting on either sell off or buy in. Same thing here. We can go back and we can fib anything really. So let's take this move right here. We have low to high. So we have the fib come up, touch the top. This is a crazy day, but we followed it very, very accurately. We formed a nice W on this 0.618 level, and 0.618 is considered the golden ratio in Fibonacci. So most runs you'll find will go from their point A to point B, and then retrace back down to the 618 level before continuing their trend, which is exactly what we saw here. And we can back check that as well, if I can manage to erase this. Let's look at a previous run. Let's go back to, that was our previous high. We busted out, came back down, and then we jumped. So previous high, busted out over the top, came right back down, and then we jumped. Our high here was right here. This is our swing low to swing high, and we fell right down to the 618 and rebounded up. We can test that again back here. This is our low essentially down here, and there is the high, low to high, and then we get a fall. And where does it fall to? It retraces right back down into the 618. So over and over and over again, that's a really good point for Bitcoin to look at an overall trend and decide if you want to get in. If we're in the midst of a crash, it's likely that we're just retracing back down through price that we passed through to the 618 level. And that's really how you're going to use fibs across the board, and Fibonacci extensions being anything over 1 or under 0, and the Fibonacci retracements, which show you the actual retracements in between the move you've already done. Let me know if you have any questions on that. I know it's a very common topic that is thought about, where to make your fibs and larger scale or shorter scale. It just depends on what you're trading. If you're trading this short time period, that's what you want to use. You can do this over weeks even. I mean, if you look at like week candle charts, this is Bitcoin where each candle is a week. And we can come all the way back here to, this is our low point back in 2015. So obviously we're making new highs, but let's look at, for example, right here. That was our swing low to swing high before we had a crash, right? So let's take the Fibonacci trend-based extension. We'll bring it from our swing low up to line up with our swing high, which is that level. Bring it on over. And would you look at that? We fought right through here. Now you can click on your settings in TradingView or Coinigy, and you can add more fib levels. I'm going to add, well, it's 2 up there. We were kind of in no man's land as soon as we passed above it, but you can use this to kind of determine the next spot that we'll hit in the huge trend. You know, this is years. The next point of interest is going to be this 4,700. If we can find support at 4,700 for a good amount of time and then break through it for more than a couple of weeks, then the next logical step is 5,700, and that's how you can use these extensions. Good luck trading, guys.